President Trump also is talking about Powell and trying to get rates cut. He wants our rates to go down, but I don't know if Jerome Powell, even if he cuts rates, I don't know if it does the thing that he wants it to do.
Yeah. Well, yeah, that's a really good point. I mean, it's once we bring down rates, the dollar goes down. There might be a kick in the stock market. Gold and silver, I see surging like they always do when the dollar is devalued. I mean, it's not going to solve all of the problems, right?
Correct.
I mean, it's we have a spending problem. So
right, exactly.
That's the problem. We got to stop the spending.
And what happens, Trump's saying, like, let's drop a full percentage point. But my fear is that we drop a full percentage point, which basically says, like, we're reckless, right? We're just gonna go ahead and be. And what if the 10-year Treasury goes up, which it did last year? If the 10-year Treasury goes up, that means real estate debt stays high. That means that mortgages they'll go in the 7, 8, 9% range. How does that help us? Does that help us in any way?
It's not.
He needs to, the biggest thing we need to do is get confidence back in our bond market. The way you get confidence back in our bond market is cutting debt. Moody's said we're spending too much money. If we cut our spending, we cut our debt, it'll send a message to the world that we're doing a better thing. Maybe our credit rating goes back up, which means people buy our bonds again. They buy our bonds, interest rates drop. That means 30-year mortgages, credit, everything drops. I don't know if the Fed has the ability to do what it used to do. I think in the early 2000s, it could affect. They raise, they lower. They could have this power over debt and credit in the world. But today, the world it's smarter. It sees our debt. It doesn't trust the Fed anymore. It doesn't trust our dollar anymore. So we've put ourselves in a very precarious situation.
It's kind of like it reminds me of the old Little Red Riding Hood, right? Or she's the whole story where it's where she gets fooled several times.
Several
right?
times.
And it's kind of, we're there now, right? It's
yeah.
Like the Fed has lost a lot of its credibility, a lot of its authority.
Yep.
How it used to affect the markets 10 years ago, it's a fraction of that now.
Absolutely.
The money that they print isn't enough. The QE always has to be bigger and bigger and bigger for it to work.
Absolutely. And QE is going to start to happen. It's going to start to happen. And that's why let's really get into silver, because I really believe silver is the big story right now. Silver broke 36.
So silver's breaking out as we speak. I mean, it's gone up 10-15% in the last week, maybe 10 days.
And I predicted 36 to 37 silver around this time in my book, Silver's a New Oil. I talk about it, which was released in December of last year. I talk about this price, but my price target for this year, based on the dynamics today, my price target for this year is $46 and some change. And I'll tell you my thinking behind that is that every month they're going to do a bond sale. And if we can't sell our bonds and the Fed's buying our bonds, that's QE.
Yep.
So we're in the beginning of QE. So I believe if Q3 we do heavy QE, coupled with the idea that we've already started to see this surge in silver. And we know as silver buyers that when silver doesn't just run slow, it runs fast. And so I think we're going to add QE to the mix. We're also seeing ETF inflows, $450 million in silver inflows that just happened. And so what I think is going to happen is we're going to see the same dynamic that happened in gold. So basically with gold, we've talked about this. November last year, ETF buying, derivative gold buying just went nuclear because they knew that under this new administration, we have a lot of volatility. So they bought gold. And then by January and February, they said, well, I don't want derivative gold. I want the real gold. Then they started calling in their contracts, right? And then people started to panic. Oh, there's no gold. Shoot, what are we going to do? So they start calling in, they're getting gold. So I think the same thing's going to happen in silver. Is they're buying the derivative ETF version. They're going to buy it for a few months. And then they're going to go, wait a minute, is there enough silver to actually fulfill these? They're going to want to take possession. People are going to want to take possession of their silver. Wait a minute, there's not enough silver. So then I think those dynamics alone will push silver up to 46. So we're sitting at 36 right now. I think we hit 46 by the end of the year. That's above a 30% growth story. But the bigger story is even this. It's still not even above its all-time high at 46. 50 is the all-time high. So I think the silver story is massive right now. And I think that what you typically find is that the US market is a little late to the game. I think we're going to see them jump in around 40. I think we're going to see some heavy buying around 40. That's going to push it up to 46. Now, in the physical market, what we do, if we see silver from 32 to 46 in 1 year, what do you think is going to happen to the physical price of real silver? Yeah. What do you think is going to happen?
I mean, the premiums have only one way to go, and that's up from here, I think.
Yeah. But we haven't seen it. It's still today very inexpensive to buy silver, the real thing. And so we haven't seen that spread between the spot price and the physical really go up a lot. I think we're going to see that continue. I think we're going to see the demand go up. I think we're going to start to see some shortages because the mints have been slow. They've slowed down over the last year and a half. They've slowed down minting. They're not minting like they used to. So I think there's going to be a catch-up game that's going to happen over the next, we're in June now. I think over the next 6 months, it's going to be a race to 46 is my prediction.
No, and silver right now is really like a coiled spring because we've seen gold go up 30% with silver almost not moving at all in the last 6 months to a year.
Yeah.
Right. So, we've seen gold go from 2,500 to basically 3,500. And we saw silver maybe go from 27 to 30, something like that, right? Or 28 to 30 in the same time period. So it was, and historically, right, when precious metals are moving, when gold and silver are moving, historically silver outperforms gold.
Yes, correct.
During the bull run, right? Yeah. It's very rarely do you see silver as the laggard. It's always the leading indicator.
So 90 to 1 is where it's at right now. Yeah. It was 100 to 1. The last time we spoke, a couple months ago, we were saying 100 to 1 is not normal. No. We're at 90 to 1. 90 to 1 is still not a normal ratio. If we get back, do you remember the ratio in 2011? Do you remember the gold to silver ratio?
Well, it was 50 divided by 2,000. So what is that, 40-ish?
It hit about 32.
32, yeah.
So just imagine we go through QE now and we get back to a 30 to 1 ratio of where that means, silver's in the $100 range.
That's correct. Yeah. No, and that means that if you buy silver today at 90 to 1 and you liquidate it at 30 to 1, you can exchange that for gold and have 3 times as much gold as you would have had if you just bought gold to begin with today.
Yeah. Let's pull. Can you pull up? July of 2011? See how far back this chart goes. There we go. 30. Am I right on my map? Look, go. Yep, right there. What's that? 42. So it hit about 4. Okay, so let's say 41. 41. The gold to silver ratio is 41. We're at 90 right now. So there is a lot of room, and that was all based on QE. That was literally based on QE money printing because we went through a crisis. And the government said, like, how are we going to stimulate the economy right now? Because people are nervous. They're not buying. I mean, people were losing their homes. They had to do something. I think we're in a similar dynamic right now. Whereas with rates the way they are, the foreclosures are skyrocketing. I think we're going to see a big collapse in the stock market. I think in the next 6 months, we're going to see more and more houses, more commercial properties. I think we're just going to see it. And the Feds and the government's going to have to say, well, what are we going to do? By that time next year, Jerome Powell's out in February. I think that the new person comes in, they cut rates, they do QE, they're going to do everything. They're going to try to throw everything at it. And that's when you're going to see really the metals market take off. I think then you're on a 2 to 3 year run. Things will really take off because then we're basically saying we can't control this anymore. The spending's out of control, but we can't do anything. There's nothing we can do at that point. Because I guarantee you that next Fed chair is not going to stay status quo. They have to come in and shake things up. So I think QE is the play right there. So we got a little bit of a hidden QE. And then I think in February next year, they're just going to be blatantly out there doing it. So why is this important to anybody? Why is this important? Because we're sending a message to the world that our spending is out of control. We're not able to get it under control. We can't. And when you can't get your spending out of control, Moody's already downgraded our credit. Who knows what they're going to do later this year? They could do it again. I mean, if we ever go from a double A to like a B plus rating or even a low A minus rating for our debt, I mean, that means the world's not going to buy our debt anymore. And that's a scary situation for us. We need the world to buy our debt. We can't go. I saw Ray Dalio talking about this in an interview. He's like, the bond market is the market that dictates everything because we live on debt. The world's living on debt. So if we can't get our debt out of control, look at this debt bubble here. What is this? Foreign investors hold $9 trillion of debt, and Japan holds the highest amount of our debt here. So we're in a very unique position right now that we've never been in, where we don't have the instruments to sort of fix things. And so do we go to a gold-backed currency? I know they're talking about a crypto reserve, but that doesn't really help us long term anyway. That's just digits in the sky. So what is the way to do it? We have to get our debt under control, and yet there's been no indication that we can do it.
No.
Right? I mean, it's basically like, and I say this a lot, it's like having 4 credit cards and then opening up a 5th credit card to move the debt over. You're not fixing the problem, right? Maybe you get 0 interest for a little bit, but eventually you got to pay down. We eventually need to pay down and get this thing out of control. And I don't see anything happening in today's world where that's going to happen.
No, because what does that mean? That means a recession, right? I mean, we need a recession. We need the market to drop, right? We need the value of the dollar to drop. Like right. Medicine is going to be very distasteful.
Yeah.
But we need it more than we ever have. And whether it's Trump or Obama or whoever it is, any administration doesn't want to take that on, right? Yeah. As soon as you take that on, you realize how bad it's going to get. And
absolutely.
You're going to get blamed for it.
Yeah. We've hit a time, and I mean, I've been doing precious metals for 16 years, and I've been looking at the debt for 16 years, and I look at the debt clock, and I look at the gold price and the silver price, and I can't see how they can continue with the lie anymore. I don't know how they continue with this lie. And the lie is happening everywhere. You go on, MSNBC and they say the stock market's great. I mean, look at the stock market. The stock market makes no sense. Let's pull up the stock market right now.
Yeah, the S&P maybe.
S&P all-time highs. So we have a situation where, look at these numbers. Yes. I mean, we're up today. Look at these all-time high numbers.
Maybe the last 6 months.
I mean, look at that. It's unbelievable.
6 to 5, back to 6 in a couple months.
So we have the most debt. Our credit gets downgraded. Nobody wants to buy our bonds, yet the stock market just keeps humming along. It doesn't make any sense. Companies survive on the economy. They survive on people spending money, people traveling, people doing well, people putting money in the stock market. More people are getting laid off. I mean, look at that. Look at the NASDAQ. I mean, it's all based on a few companies and a belief in something. Everything is just based on a belief. And I think that belief is going to start to go away. I am just flabbergasted that we're seeing these all-time high numbers in the stock market. In my opinion, they don't make any sense. I think long-term, we're going to see some corrections. I know a lot of the wealth is, NVIDIA and, these top Magnificent 7 companies, but I think we're going to see this summer a lot of things are going to come out.
Yeah.
A lot of people I'm talking to, business owners, they're not hiring right now. They're slowing right now. So I think big picture, what we're trying to say to people is don't, look at the charts, look at the graphs, look at price Schiller index, look at, the multiples of stocks, look at what's happening. People should be really focused right now. If they have a lot of the money tied up in the equity market, you should be looking at these things every day, because I think that what we're seeing out there, these prices are just based on faith, and they're not really based on the fundamentals of the markets.
No, it's amazing. I mean, there's been a 30 to 40% swing in the stock market this year, and we're halfway through it. Right? It was down 15 to 20% the first quarter of the year, and now it's up 15-20% in the second quarter. And I can't remember we've seen a bounce back that quick, that fast. I mean, it was almost like it was like it was planned. Like, here, we're gonna take our thumb off the scale for a minute and then put it right back on.
Yeah, absolutely. So, Noble Gold Investments, we're still humming along, gold and silver investments, platinum's been up. I think platinum's up
even more than silver.
More than silver
the
this
last,
year.
yeah. I mean, platinum's starting to really
Platinum
break out.
price is really starting. So anybody we have a platinum guide
Yes.
that we just came out with, that we just revised. We have a silver guide. We have a gold and silver guide. It's a great, look at that.
Almost 30% in 6 months.
Yep. 30% platinum. Yeah. And you've been talking about platinum. You love platinum.
I love platinum, yeah.
So I think anybody watching, time to get educated, time to learn, call us. We'll send out all the free guides, talk to a live person, learn about what we do. But I've never been more optimistic about the precious metals market. And also, if you look at bull runs in the precious metals, I would argue we're probably in our 3rd year of a bull run. The last bull run we had was 10 years. So we're very early in our cycle in terms of the bull run. And I think there's going to be more government, printing, more government debt that's going to happen out there. So anybody want to learn about what we do, talk to Josh or anybody on our staff. There's a number 877-646-5347. Tons of free information, lots of guides. Talk to a live person, not a bot. And we're here to help and educate you.